Good morning, everyone. Welcome to the European crossover webinar. Looks like my economic calendar is messing up again. It's showing up all these other countries. I'm not sure why it's doing that again. Um, so it's got all these other countries that aren't even covered, but I'll have to cancel this out and then we'll just take a quick look at FX and where that stands, and then take a look at the news and just move into the analysis. We did see the earnings yesterday. Actually, Apple sold off on that earnings, which was actually very good earnings, and Facebook immediately dropped on the earnings. Sold off pretty hard, came back a little bit here, just in the after hours. And of course, the big move with GameStop still up here in the stars for the most part, and AMC is another one they've been driving pretty hard. But we'll go and take a look at on the FX, and then we'll just touch a little bit on the indexes. We've already done all the analysis on the indexes. There's really not a whole lot to do, just to look at the levels. We'd already laid out the game plan yesterday. I laid out the game plan very, very well throughout the week. So really it's just a matter of it came to the level. So really that's it. That's where we're at right now. We can just discuss the levels. There's not really anything more in depth other than what I provided in the chat room over the last couple of days saying, hey, we're looking for a move lower. Thought it may not, the extent of the move may not come until Friday, but it actually hit all those key levels as of yesterday. So all we're doing is we're just revisiting these levels right now in the European session. There's nothing new. So we'll take a look at where we stand with FX, and we'll just touch a little bit on the index, and then we'll go straight into the FX analysis. So we're taking a look at the euro. It's a little bit lower. We did hold the 50-day moving average yesterday. We actually took a dip because the 50-day moving average was coming in at 21.01. That's where I put the support. I was going to put the secondary support, which would have been down here, I guess around the 2073. So we did overshoot a little bit and come right back. But you can see we're sliding past the 50-day moving average, which has moved higher, opens the door for us to move lower. Cable. Still just traipsing around between this 36 and 37. It certainly looked like it wanted to make an extended move from the day before, but we ran out of gas yesterday. But we're not selling off, but we're not gaining any ground either. Aussie, we finally did see a break here. In the Aussie, once again, I don't even use the moving averages. It just happened to be that when I'm looking at some other stuff in Fang Man, I have the moving averages there. So I've just happened to leave it here. We finally saw Aussie come back, and Kiwi, after trying to break out from 2 days before, turned and fell in and is moving lower. Probably more of that along the lines of the risk off type situation. Dollar CAD with finally reversing. Remember, I called this level earlier in the week, and it's revisited 3 times and held it, which is the 2684. I think each time it was 84, but one time it actually hit 84. The next time it was 85, and I guess it hit 85 again before taking off big time. Take a look at the peso. Also, we're making a run up here. I have resistance at 2043 today, and you can see where that comes in right there. It's going to be 2043, 2042.87, which is 2043. That'll be today's bias chart resistance. We visited that area yesterday. This the level we talked about from 2 days prior, which we had when we had here, which is 2033, and I think we got up here to, what was it, 2032. We came back, we close to it, but I mean, that's where we tagged it. But our resistance yesterday was the 2014 after we fell back. We're looking to move higher. Dalian finally broke out of this area, but the resistance will be up here at 452. And the cash dollar index really hasn't done anything. I mean, it went to the resistance, which is 90.79. I mean, it went above it, but it closed below it, well below it. Then we're trying to make another move back higher here. So that's where we are. We'll take a look at the index, then we'll move into the analysis. Once again, there's not really much to say here. I've already laid out everything. I mean, it's already Thursday, and I've been talking about this move since Monday, since we saw that big move when we saw the move cap it on Monday, and then we saw that extended move up. It looked like we were going to move higher. So honestly, there's nothing more to go on and add on here. If you've been in the chat room, you know everything that I've discussed. Here are all the levels I've already talked about. I was looking for a break. I laid out the case that here was the heaviest volume. There was 100,000 in 1/2 hour trade, 300,000 here. We came back and I laid this out since we were up in here. We saw this big break right here that day on the late afternoon. I forgot which earnings it was there. I think it's Microsoft. But here I kept saying, "Hey, look, we're gonna. I don't know if we'll break it, but we're gonna at least come down here to visit." So we were already looking for this move, and then of course all the wheels started to spin off. And then I shared this out. Hey, look, it was 13,123 with 13,046. And I did mention this trend line. Now I was hoping that we weren't going to hit this trend line, but they hit this trend line in the after hours because of the way the earnings came. So basically, we've hit all the technical levels. That's it. So there's not really much to go over other than, hey, we're at the trend line, and that's it. Okay, I think we will move lower in turn, but we're gonna, and everything I said, I was actually gonna even play the video yesterday. I said, when we were in the morning, there was some people in the chat room that were saying, "Oh, we think this is going to go higher." I'm like, "No, it's not going to go higher because any portfolio manager with half a brain is going to want to take this stuff off the table." Well, there, I was watching CNBC Fast Money, and Karen Fitterman, which is a well-known uh, a portfolio manager who's actually owned Apple since probably 80s and has not even been wanting to release any of these stocks, even said, "I don't really understand what's going on, but in this type of situation, you just have to go on. I'm taking my chips off the table. I'm getting out." And certainly that's what I was predicated is you're going to see this as they have to go out and they're saying, "You know what?" And I said, with crazy stuff that's happening, which is exactly what she said. She even said, "I'm not saying the market's rigged, but it's actually like it's almost rigged like that." So in a situation like that, I have to just, take my stuff off the table. That's exactly what happened. And other people were basically echoing her comments, but she basically mirrored what I was saying, or my thoughts would be for any portfolio manager, that they're going to say, "You know what, situation like this, stocks are acting crazy. You just got to go on and you've got good gains, good profits. You're going to lock those in." And that's what we saw. We saw this selling, and basically it's already hit all the targets. So there's nothing else to discuss other than, "Oh, wow, we're probably going to eventually come down here," but all the targets have been hit. Here's my first key target, the 13,123, which we saw initially a bounce off of that. The 50% I said here with 13 just below that was going to be 13,022 was a 50-day moving average. We came down here, and here's the trend line, and now we're holding. So there's nothing really more to say on that. Like I said, other than that's where we're at. And I don't really follow the S&P much, but there's the S&P. We did break lower. I mean, I pretty much just followed the NASDAQ. They're basically going to do the same thing, but I'm just saying is I don't really follow that very closely. Now, taking a look at Bitcoin, same thing here. We talked about Bitcoin. I said earlier in the week, even before we got there, I said 34,800 is a big level. Got to get there. If we get 2 consecutive closes above that, that will negate it. But that's the resistance. And as long as we're below 34,800, we're going to be bearish because we've broken below the trend line. And this is where we were at. And I remember sharing this on Friday evening, speaking with some guys in the chat room. And look where we went to, 34,800. And then we rolled over. Hence, we broke down lower. And that's it. So that's where we are right now with the NASDAQ. We're just come down. You can see we've fallen apart. I really didn't understand where there were some people saying they wanted to buy stocks or, "Oh, maybe I want to step in and buy stocks." And I kept saying that in the chat room. I even noted to myself, do not buy. I mean, I went long a couple of times for a little bit of profit, but I'm saying for the most part, I said it was not a good time to go and be buying. And even made the thing in the chat room in the day was, this is basically like I put the video in there called Waterfall, because people over here trying to chase waterfalls as this thing was falling. And I said, it just wasn't the environment. It was the environment for the market to break lower because of everything that was going lower. So that's all we're doing. We're just revisiting back down here in the NASDAQ, or back on the trend line. And now eventually we'll probably get a break lower. I don't know when that's going to be, but I don't. We might even break a little bit lower on Friday. I don't know. Maybe we do. It's just that all the selling's already been done. It's already been done now. They've already hit all the levels. So, I don't think there's no need to chase it. I think that it will break, but you can easily get short today and see the market come back up. Not wildly up, but come back up. And I put in the chat room too is that for those who are thinking that this market may not be bearish already, or that we're in the initial phases of a correction, is that this market would actually have to go to 13,281 just to negate the downside. You wouldn't even get a buy signal until you got above 13,395. So whatever rally it gets, it's all going to be in the sell mode. So we're going to cover the FX stories, and then we'll get into the analysis. And I shared all this stuff ad nauseum in the chat room. I posted so much stuff yesterday and the day before in regards to this potential move. So unless you weren't, bothered to listen, it was all there for you throughout the whole time. Let's go on and go into the Canadian dollar. The Canadian dollar falls by the most since October as global shares slide. The Canadian dollar fell to its lowest in more than 2 weeks against its broadly stronger U.S. counterpart on Wednesday, as some recent trades in financial markets have been supportive of the currency, showed signs of unraveling. The loonie was trading at 28.01. As recently as last Thursday, the loonie was trading at its strongest in nearly 3 years since touching 25.86. The Canadian dollar pulled back in what could be slight unwinding of a very crowded trade, long risk, short U.S. dollars. Oh, and that's another thing. Somebody, I'm not going to say who, heard some stuff talking about, I think this is happening because of the currencies. This had nothing to do with the currencies. Anybody tells you, look, I'm sorry, you're wrong. This was all equity driven. The dollar's just riding piggyback on what's happening in the currency markets. The currency markets are not moving this market in any way whatsoever. These risk assets like the Aussie dollar, they were all being driven on what was happening in the currency market. The dollar or these other currencies had nothing to do with what happened yesterday. They just went along for the ride, and somebody was hinting or suggesting that, we think the stocks may come off because I think the dollar's going to rally. The dollar, look at the dollar, look at the dollar index. It didn't do anything. Some of these risk currencies came off. The euro came off a little bit, but then recovered. So had nothing to do with the currency markets. It's all about the equity markets. It's been about the equity markets for almost 9 months. Now the cable that kind of has been marching to its own drummer for a lot of different reasons, but other than that, has nothing to do with currencies. Anyway, the Canadian has pulled back, and it could be a slight unwinding of a very crowded trade. Long risk, short U.S. dollars. U.S. stocks suffered the biggest one-day percentage drop in 3 months. And the dollar was boosted by the safety buying as investors turned more cautious. And actually, if this was about the dollar, then why isn't the dollar higher? The dollar's kind of mixed. So once again, this move yesterday in the equities, I'm not sure what this person was thinking that the move in equities was because of some kind of thing that the dollar was going to take off, which the dollar didn't take off, and look where equities ran. So once again, has nothing to do with the currency markets, just what you saw in the equity market. Update on the sterling. Sterling gets vaccine boost to hit an 8-month high versus the weakening euro. That's actually from yesterday because we're into the 27th. Then the Australian dollar. Australian dollars and New Zealand dollars suffer sharp reversals as global mood swings. Australian New Zealand dollars were in retreat on Thursday as a sharp reversal in global risk sentiment wrong-footed speculators and triggered a wave of stop losses. And like I said, here's the key. A reversal in global risk sentiment had nothing to do with the currencies, had everything to do with what's happening in equity markets. The sudden change in the mood saw the Aussie down to 76.28, hit its slowest since late December. That was a marked turnaround from early Wednesday when it had been testing resistance at 77.65. The Kiwi dollar having shed from its top to 72.45. That took it uncomfortably close to the January low of 70.97. Concerns about delay in the global rollout of the coronavirus clouded the outlook for commodity demand prices. Joseph Caperso Also, reports that Beijing wanted China to steelmakers to reduce production. The Asian giant currently takes over 80% of Australia's iron ore exports. And the economic unease did provide a boost to bonds, with Aussie bonds easing to 1.05%. And then lastly, on the dollar, dollar stands tall as global risk rally fizzles. Well, I don't know about standing tall. Um, because we rallied to the 90.79, which is my resistance, and then closed at 90.60, and from the prior day's close, that was a heap and rally of 45 ticks. Not what you would expect if everything was coming off. I'm just saying it did not really rally that much. Some currencies like the Aussie did fade, but once again, it was more linked to the stock market pullback. The Dow extended gains against currencies on Thursday as the stock market rout, triggered by concerns about excessive valuations, boosted safe harbor and demand on the U.S. currency. So once again, triggered by concerns about excessive valuations, you saw that with the GameStop and also the AMC. And one of the concerns was, like I told you, when these stocks out of nowhere can go anywhere, and basically they were runs on hedge fund shorts. And it's like, wow, the inmates are running the asylum, and that's what I'm saying. In a situation like that, like these markets are acting kind of crazy, like in a situation that doesn't make sense and leaves you as a portfolio manager in a vulnerable situation after we've had a wild run in markets over the course of months and months. So it made sense that they're going to pull back and take some off the table, and certainly we saw that yesterday. The euro nerfs losses after the ECB warned that interest rate cuts are possible to curb the currency's recent gains. Um, Concerns about a short squeeze among hedge funds, worries about corporate earnings, and delays in coronavirus vaccinations have slammed the brakes on any heady rally in global equities. Risk aversion, supporting the dollar, is a healthy correction after a one-day rise in risk assets. And let's see, Asian stocks were in a sea of red, and futures pointed to a weak start to the European trade. U.S. Federal Reserve policy kept policy unchanged, but did signal some concern about the pace of economic recovery, and that's it. So with that, we'll go and start the analysis. And you can see here, we have faded a little bit, from, see right here, from this move. But if you look at the big picture, it's relatively well contained in here. All we're doing is just revisiting, and here's the support level right here. So we're just revisiting what we were at yesterday. So it's not like a big, huge move or an extended move, or we're looking for a gigantic move here. We'll have to see what happens on Friday, but all the bulk of the selling's already been done. I think eventually we will have to work lower before they'll step back into buy, but once again, that's not for here today or tomorrow. But we'll move on to the analysis. And let's go move into that analysis. Starting with the euro. The euro was able to close above the 50-day moving average on Wednesday. The 50-day moving average now moves to 2120 for Thursday. A close below 2103 will open the door for a move to 1969. Resistance will be 2170. So 2170 on the upside. And on the downside, right now 2037. But we are looking potentially for a move down to 1969. There you go, 1969. Onto the cable. Cable continues to dawdle between 36 and 37. Resistance on Thursday would be 37.35 with support at 35.75. And 37.35. The Aussie posted a solid pair back on Wednesday. Support on Thursday will be 75.69 with resistance at 77.09. So looking for 75.69. Actually coincides with this 50-day moving average. Not that I was looking at that, but it just happened to coincide there. So 75.69. 77.09. The Kiwi, after breaking higher on Tuesday, fell back solidly on Wednesday. So we broke out of this range here on Tuesday. It looked like we were going to be making another run. Saw a pretty good pullback yesterday, opening an immediate challenge of 70.98, which will be support. Resistance will be 71.92. And 71.92. Dollar CAD. Dollar CAD held the 28.64 for the third day in a row. Here's at 28.64. I don't know why I said that. 26. Yeah, I did say it right. 26.84 right here. For 26.84 for the third day in a row before reversing higher to close at 28. Resistance on Thursday will be 28.57. Wow, we're already above that with support at 27.42. So we've already taken out 28.57, which came in right there. I was going with this closing up right there. So it's actually going to be this high now. I thought about that, but I thought, that might be a bit of a stretch, but it's still moving higher because we're actually still seeing equities on their lows or towards their lows. So that's going to be right there, 28.76, which is this high mark right there before the market turned around, fell back. So it will be 28.76. Support is going to be back here to this level. Actually, it wouldn't be that level because they'll try and buy them. It'd be this close right there, which would be 27.82. Onto the dollar peso. Dollar peso pushed stops to challenge old resistance of 2032. Resistance for 30 for Thursday will be 2043 with support at 2017. Dollar yen finally broke out. Dollar yen broke out of its run on Wednesday. Thursday's resistance will be the old resistance of 452. That's that solid line here. We support it in 397. Onto the cash dollar index. This hasn't really gone anywhere. You see what I'm saying? So there wasn't no big move in these currency markets that were gonna change and were causing this big stock market fluctuation. It had nothing to do with the currency markets. If it was, why is the dollar here still below even 91? The dollar only rallied 45 ticks. So the currency markets had nothing to do with yesterday's move. I'm not going to say who was saying that, but they were dead wrong. Anyway, on to the dollar index. The dollar index challenged resistance level of 90.79, but paired back. That was even yesterday's resistance yesterday. You can see right there, 90.79. We poked our heads a little bit above it, but look, we didn't even close above the 90.60 area. So much for, the dollar, this big move in the currency markets, and it was all going into the dollar. So the dollar index challenged resistance area 90.79, but paired back. Resistance on Thursday will be 90.92 with support at 90.40. And on to the cross rates. Finally saw this thing break lower here with this with the Kiwi yen, because the yen definitely gone strengthened. I'm surprised it's even still holding up here. That's a bit of a surprise. We did have 74.29 for yesterday. That still held, but we're breaking lower today. Look, we've got support here at 74.05, but I would think that we'd be able to push a little bit lower and goose some stops. We'll see what happens. So I'm going to go, you see right here, this is the most where you see the most confluence here. You see this close with this level, this wick and that wick. So let's go there, and that would be 73.95. Resistance, this close. You see the close, the body there? 74.69. Onto the euro pound. Nice hammer here in the euro pound. You can see resistance is still 88.75. We'll keep it simple. Just go with the technicals, 88.75. Support, the lower part of this wick right there, you see? 88.28. Onto the euro odd. Oh, nice run up here in the euro odd. We had 57.22. Of course, we've reversed things around. We've kind of got things going as the odds paired back. And remember how overextended the odds been. So you have to think that we can still move somewhat higher. I think, we're into resistance here. Let's look at a 2-hour. I'm not sure how much for this guy. I think eventually we're going to come back up in here, which is a 59.78. But let's see if we see anything closer today. Right there. That's 59.40. 59.40. And support is going to be, looking at a 2-hour, right there, 58.52. Onto the euro QE. We finally held in here. Look, we're trying to make this run. We are right up here at this key level. We'll give it right there to see if it can stretch up to 70.36. Actually, this thing probably looks like it has some good has the potential to make a further run for a good move here. Support. Well, they're coming back. It's going to be. I don't even think we're going to go back here. But you see this wick here? That would be support right there. That wick. Oh wow, that happens to coincide with this body close right here. But this wick is at 69.35. Aussie yen. Finally starting to break lower. This is going to be support down here. We might kind of find some support right there for today. For today, we'll go with the 79.06. I think we're going to move down here, though, to 78.83. But for now, 79.06. With resistance right there. Actual resistance would be right there. This close and not open right there should be 80, but we'll pull a little bit lower, which is going to be, let's call it 79.98. Onto the guppy. Things still doing pretty good. Hold up here. But I think we're going to stuck in this little tight range, and maybe we'll start to see this pair back. It's easy to say resistance would be the high. We'll go to 2-hour chart and see if we see anything. Okay, there's a resistance right there. 42.62. For right now, support's going to be there at 41.85. And lastly, with Sterling Odd to close out the show. Pretty good move, but of course, like I said, not only is Sterling doing well, Aussie's doing weaker. So you got that twofold move. Really, I don't think we're going to get real resistance until we get there, which is the 80.35. But you can see right here, we got this wick down here, this wick here. You see those two wicks? So for right now, it's going to be 79.97. And support this wick right there, 78.80. And that's it. That's where we stand here with the currency pairs. And with that, we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.